A lot of partisan talk about this tax reform bill. Ask a Democrat and it's a gift to the wealthy and corporations. Ask a Republican, it is justice for middle-class taxpayers.
So let's help you decide for yourself. David Goldweitz is a CPA who's here to help us do that. He's the Senior Director of Tax and Accounting Services at Fisk & Company. Welcome. Thanks for being here.
Thanks for having me.
Nice to see you, David. So what are some of the deductions that are eliminated now, and what about those that will be offset? Will any of them be offset?
Well, there are some very popular deductions that are eliminated, such as unreimbursed business expenses and all miscellaneous deductions, tax preparation fees, union dues, things of that normally would be deductible as an itemized deduction are eliminated.
In favor of just a standard deduction.
Right. The standard deduction has been increased significantly for each tax bracket. For example, if you're single, it's been increased to $12,000 from $6,350. If you're married, it's been increased to $24,000. So there is a give and a take that's taken place.
Well, that's good news. But let me ask you, who benefits the most from these changes?
Well, the ones that benefit the most from the changes would be obviously corporations, as everybody has heard. The corporate tax rate has been reduced to 21%, and that's a permanent change. All of the changes that are taking place on the individual side expire in 2025. So there are some individuals that will benefit significantly.
So we heard from lawmakers today, leadership in the House of Representatives very excited. This is the Republican bill, and they passed it. And they say that workers are going to start to see changes beginning January 1st, and that their paychecks are going to be affected almost immediately. What kind of changes are workers going to see, the average person?
Actually, the change will take place in February because it's going to take time for the IRS to redo the charts and adjust the withholding appropriately, because personal exemptions have been eliminated. Even though the standard deduction has been increased, personal exemptions have been eliminated, which therefore means that your paycheck will change. But it probably won't happen until February. Everybody would see a slight increase in their paycheck.
In take-home pay.
In their take-home pay.
So what does this mean for an average employee? Should they be contacting their HR department and changing the forms you fill out in the beginning when you first start a job with the deductions and everything else?
It's a great question. The HR department, in all likelihood, after the IRS changes the W-4 form, will be reaching out to you. Everyone will, in all likelihood, have to fill out a new W-4 form.
Okay, so that's good news. You're going to get more in your paycheck because your company is going to be withholding less. That's good news. But then what happens later on? The changes that I've seen in the tax rates are either 1% to 2%. Is that the same thing you're seeing?
Yes, the change in rates are small except at the higher tax bracket.
Okay. And then what about what we heard that this is going to simplify the tax code? You're an accountant. Does it simplify the tax code?
Not really, because the original intent of the tax changes from the House of Representatives was to reduce the 7 brackets down to 3. This current law that is being passed still has 7 brackets.
David, let's talk about parents, because we know that there was sort of a last-minute negotiations over the child tax credit. Senator Rubio of Florida was one of the senators leading the charge to increase that for parents. Explain to us now what parents are going to be able to do with some of the money that they spend caring for their children.
Okay, the child tax credit has been increased from $1,000 to $2,000. But what's really important, which was important to Senator Rubio, was that if you are in a very low tax, if you're a very low wage earner and you have very little to no income tax, you will still be eligible for a tax credit of $1,400, even if you have no tax. So you'll actually receive money from the government even if you have no tax liability. And that was important to Senator Rubio.
That's good news. And we should remind folks that none of this applies to 2017. So when you do your taxes for this year, the status quo is
correct.
What rules.
Everything starts in 2018, and some changes don't take place until 2019.
Real quickly, as an accountant, if you were to give this sort of a thumbs up or thumbs down for the typical person who might be listening to us tonight, is this a good thing? Is this a net gain?
I think in the long run it'll be a net gain, but not a significant net gain.
Can you tell us who it disadvantages? We know who it helps, right? The corporations, but who's at a disadvantage with this?
Well, there are actually certain wage earners that will lose significant deductions, and also if you live in a state which has state and local income tax, you will lose the ability to deduct that, because what they're doing is state and local income tax and property taxes will be capped at $10,000. So people that live in New York.
Yeah, that's why we saw the no votes from those lawmakers from New York.
That's going to be a significant changes for those folks.
Them. Yeah. David Goldweitz is with Fisk and Company, joining us to help sort through this complicated tax information that we're all trying to wrap our heads around. Thank you so much for being here.
My pleasure.
Thank you very much.
All right, the Senate debate on tax reform goes on. Stay with us throughout the night. We'll be live in the Capitol tonight at 11 with the latest on what's happening there.